Hey folks, welcome to the Rein Channel. We're doing a market update, and again, I am joined by our trusted partner, good friend, Jordon Spitters with Eximus Real Estate right here in the Fraser Valley / lower mainland of beautiful British Columbia. Jordon, welcome.
Hi, Patrick. Thanks for having me.
So we're going to do a market update, and I'm going to do something a little bit different because what we see is that many viewers who are actually looking at this, they're going, okay, this is interesting, but I don't necessarily understand what it all means to me. So to give it a little bit of depth, I'm just going to take a couple of minutes. I'm going to share a screen here, and what I want to do is get back to what is it about what we do within the real estate investment network, and of course what you do, Jordon, in terms of when you're looking at a real estate market. What exactly are we taking into consideration so that we have some insights into what the heck all this information means to us? Where is real estate going? So really quickly, when we look at real estate, of course, as investors, what we're trying to do is look into the future. We want to know where real estate is going. We don't really care so much where it's been and even where it is today, because as investors, we want to see a future in real estate, whether that be appreciation growth or cash flows. What is the shifting market? And we want to look into the future. Now, what drives real estate, what gets us out in front of real estate, is understanding the economic fundamentals. Now, this is the Rein long-term real estate success formula. Many of you have seen it. For those of you who have not, let's just kind of look at what we look at. Now, if you look at the bottom left-hand side of this arrow, you'll see GDP. So gross domestic product. And when we see positive GDP, and for those of you who are going, well, what do you mean by GDP? What we're looking at for GDP is just if I give you a context for it, it's fundamentally, it's an economic snapshot, or it's a snapshot of the economic health of a particular region. It could be of a country, of a province, and even of a city. So when we see positive GDP growth, it means productivity is happening. It's a good thing to have happen. And when we see that, we see employment growth. People will always migrate to where there are jobs. Now, in Canada right now, unemployment is very low. Let's talk specifically about British Columbia. We still have low unemployment. There's still jobs happening in British Columbia, and we still have both immigration and interprovincial migration because we have jobs. We have a strong economy, and what's happening is that is continuing to increase population growth. Now, from the time we get that positive and continue to have these positive GDP numbers over the course of 12, 18 months, 2 years even, what we start to see and what we're happening, and we're right in the middle of it right now, Jordon, and I want to talk about this, which is increased rental demand. Mm-hmm. As affordability has got more difficult, whether it be the cost of the property, coming up with a down payment, being able to get financing, affordability has become an issue. So what's happening is, on top of the lack of supply, the high demand for rental units, the demand is actually higher than ever for rental inventory. Of course, decrease in vacancies because there's just not enough supply, which means increased rents. And I want to just make a mental note here, Jordon. Let's talk about the rent. It seems that we've hit kind of a rent ceiling. The rents are coming in, we're bouncing off that thing. We'll talk about that in a minute. So all of that is to say that over that 18 months, 2 years, we start to see an increase in demand as people get settled, they get the job. So new immigrants coming in to the province, they don't have a credit rating, they don't know where they want to live, they're not certain about their job. It takes a couple of years to establish the credit rating, find out where they want to live, make sure that they have a great job, and culturally, where do they want to live? Because when they're coming in from other countries, they want to hang out with people with their in their culture, speak their language, eat their food, practice whatever maybe religious, I don't want to call it beliefs, but whatever practice they might have. The point is they look culturally for where they want to go. Mm-hmm. Now, so when we look at real estate, this is some of the things that we are considering. And then those are the economic fundamentals: strong economy, strong real estate. But along the way, and this is what's happening right now, we have these issues of what we call influencers. Now, influencers are shorter term, and this influences the real estate market, and we're right in the middle of it. First off, we had the influencer called the pandemic, and that led to, first off, prices went, holy cow, the world's coming to an end, and oh, maybe it's not. The next thing you know, it drove a whole new real estate market. Without getting into the details of that, it was a strong influencer. Now, some of that is starting to settle, because of what the economic impact of all that has been. But then we also look and say, okay, well, politics, provincial, federal, municipal politics, because what we're seeing right across the country, but here in Vancouver City specifically, they're changing zoning. In other words, at a municipal level, we're working on supply. So politics and the policies that they put into place also have an impact on real estate. And the big one that everybody continues to talk about, interest rates. Here we are, our interest rates going up. Are they coming back down? Are they staying flat? We've never seen higher, stronger, or the pace of increase. I mean, it really has messed up the real estate world. Now, all of this is to say, is there opportunities as an investor? Now, the thing about influencers, Jordon, as you know, is they're shorter term. Are interest rates higher? Yes. As a matter of fact, they've never gone up as much as fast. That's had a really dynamic impact. But interestingly enough, because of supply, because of demand, prices haven't come off that much. But in the meantime, if you're an investor, you're going, oh, number one, I got to get financing. And if I can't get financing, how do I cash flow? So I'm going to leave it there. This is kind of when we're doing an analysis and when Jordon's looking at the market and working with his clientele, his investor clientele, this is what he's using as well as part of his own analysis. Now, he's got many other kind of macros, if you will, and details that he looks at, but certainly this is a consideration. So I'll quit sharing now. Jordon, that is kind of giving you, I hope, a good setup to what's going on in the market. Tell us about, is there opportunities in real estate still? What's your thoughts on what's going on?
Absolutely. So talking about those influencers and drivers, it brings up to mind the common colloquialism, this too shall pass, right? The drivers are going to be constant. The influencers, though, like you said, they're short-lived. We'll move through this. The difference between where we are today and where we are tomorrow is the opportunities available at the time, and the actions that people can take today versus tomorrow is, the windows for those opportunities might be a little bit tighter. What we're seeing today in the marketplace is that those drivers in communities that I operate in, Abbotsford, Chilliwack, they haven't changed. Like Chilliwack, for instance, one of the highest growing populations in the entire country last year with 12% population growth. It's a breadbasket of Canada. The bulk of the agricultural product comes out of this region. I mean, this hasn't changed. Easy access to the U.S., easy access to the ports in Vancouver.
Yeah.
This location, these haven't changed just because these outside influencers like really high demand, really low supply, and high interest rates. They don't change. So looking at the market as a whole, knowing, okay, our foundation, our bedrock is strong, but finding individual opportunities because of these outside external factors making it a little bit more challenging. Why don't we, rather than looking today, keeping a kind of myopic view on, is this a deal today? We've gone back to the drawing board and said, let's look at the actual fundamentals of why we're investing in real estate. It's a long-term investment strategy for most people, right? The last couple of years, we had this get-rich-quick kind of mentality around it, which is not really the reason that I think a lot of people are in real estate investing. So,
well, I think and I want to just point out here is that when we look at real estate and we use these, the drivers and the influencers, and we look at real estate as an investment, and we are not speculating. This is to say that there is a process, there is a system, and there is a train of thought that really kind of dials you into, why am I investing in real estate and where is it going? And it's not just throwing cash up against the wall and speculating on it, which was the case 21, 22 even. At the end of the day, we want to look at these economic fundamentals and make really strategic decisions. So sorry to interrupt, but I just wanted to point that out. There's a difference between investing and speculating. Okay,
Absolutely.
Let's be clear.
And that's what we're looking at now is, okay, so we have a lot of properties, prices have come down. Rents, like you said, they've gone up. They've kind of stabilized at this point. Same with resale pricing. It's kind of barcoding at this point. We saw a jump in the spring market when we had those stable interest rate periods. Over the summertime, it slowed down, and now we're kind of barcoding back and forth. Likely, we'll see a little bit lower as we head into the wintertime. And in the spring, depending on what happens with rates, if it's stable again, we'll probably see a bump. There's an opportunity today to get into properties that I consider to at least be, if not undervalued or on sale, then valued very well. And as rates either stabilize or decrease in the near future or semi near future, more and more people are going to jump into this marketplace. They're going to eventually drive up the cost of this real estate, because let's be frank, they're not going to be able to increase the supply in that short a period of time.
No.
And as we enter this kind of even more tumultuous economic scenario, where personally I believe that we're right around the corner from a recession, I wouldn't be surprised to see rates drop in the future. And that's not to say that we are banking on rates dropping, but what we're trying to do with our clients now is go and find these A properties in A locations that are going to be valuable, whether the market gets worse or whether the market gets better, and thinking about strategies to help get into those properties with a long-term view on holding these as long-term investments. So
go ahead. Nope.
Well, just looking at it, and maybe these are not necessarily positive cash flow today, but the question is, how long are you going to hold this property, and what is it going to look like, say, in 5 years when you're going and refinancing on it? What's that going to be doing to the cash flow on it? And having a more holistic long-term approach, rather than just saying, hey, your cash flow on day one may be negative 150, or you have to put in 150 a month. Let's pass on this when there's a lot of future potential with this property, and an opportunity to pick it up today before the masses jump back into the pool and start making waves.
I think it's fair to say, when you look at the region called the Fraser Valley, to your point, it's Canada's breadbasket. There's so much activity here, from business and agriculture, trucking and ports, all of that. So even the lower mainland. So when you look into the future, we have to look at the economic region that we're looking at investing in. And really the lower mainland / Fraser Valley is still a very strategic move for investors to consider. Having said that, it's not, you have to dig. There's a fundamental that I'm seeing here, Jordon, which is this. People are sitting on the sidelines. They're all freaked out. They're saying, oh, there's going to be a housing crash. There's going to be, and if that's your thesis, then I guess you don't invest in real estate.
Yeah.
But ultimately, when we look at the economic fundamentals, when we look at the region, what drives real estate, it's not like you just throw money up against the wall, see what sticks. It is really being strategic. And when the herd is all going left, because it's only the front of the herd that's driving the rest of the herd, the followers, if you will, it's time to stop. It is, the old meme, right? When the herd is going one direction, go the other direction. And this is really the case, which is to say this: step back, be strategic, be thoughtful, work with that investor-focused realtor such as Jordon, who knows this area, understands investment real estate, so that you can, in fact, make good decisions. The pressure's off. Unless it's coming in way under market, I don't think you're in a multiple offer scenario. You've got time. Yeah. You can make conditions. You can do your diligence. What's your experience been so far?
Yeah, there are still properties that, if they're well priced, they're selling very quickly. I actually lost in multiples last week. They had 3 offers on it. It was a property in Sardis. But these are not generally properties that investors are going to be looking at. These are homeowner properties. So that, for instance, this was a rancher 3-bedroom, 2-bathroom without any sort of suite potential. Yeah. That's not something I would recommend to an investor, because the income potential is severely limited there. Yeah. Whereas your standard kind of rental investment fare, your BC boxes, 3-bedroom, 2-bathroom up with a 2-bedroom, 1-bathroom suite down, they're sitting. And there's a huge negotiation potential on there, because the real buyer group for them is now sitting on the sidelines waiting for rates to be lower so that they can go, oh yeah, this is a safe investment for me, and jump back in. But by the time the news tells you that the rates are low and it's a good investment, the prices will have shot up and everyone else will already be in there. So, look, I can't guarantee that the rates are going to drop in the future, but basically, by looking at this kind of more long-term, we have an opportunity to preemptively get into product that right now is going to be cheaper today than if we were to wait for it to be a rosier outlook, so to speak, because at that point, you're not going to be the only one interested in it.
Here's what I've learned over 20 years of investing in real estate and working with real estate investors as an educator. And then, of course, in terms of the research that we do economically, is that deals aren't going to come to you if you're checked out. You have to get in the game. You have to keep the door open to have deals show up, and then be very strategic in the moves that you make. I think that ultimately is it. Will interest rates come down? It's anybody's guess. And I'd like to be able to apply some common sense to it a little bit, saying, given the economics, and at some point, Tip Macklem, Bank of Canada, is going to either have to kind of hold the rate or back up a little bit. In my own thesis, in my own real estate, I'm anticipating a pullback in the next 18 months. And I don't mean major, I'm talking maybe a 0.25%, maybe 0.5, I'm hoping. But that's because I'm looking at it and I've created a thesis for myself. It's just my opinion. I'm not giving anybody to say, do this. This is what I'm doing. And if that makes sense to you, great. Then you make that call. That's what I'm doing is I'm making a call. Is it a little bit risky? Maybe, but I just know that I'm not going to lock in for a long-term rate. That's just my own strategy around it. You have to develop a strategy. The key about all of this though, Jordon, and I'm going to keep saying it, is that when you're working with an investor-focused realtor, guys like Jordon and his team are in the game every day. So these opportunities do show up, and they may be infrequent, but let's put it this way. Infrequent is okay, as long as you're not in a hurry and you're not making bad decisions because you're chasing deals, which is exactly what was happening in 21, 22.
Yeah. No, I mean, I've got investors now where they jumped in 21, 20, 21, 22, and they're holding on to product now that they kind of wish they didn't buy. So, it's about being metered. It's about taking a strategic approach to it, but looking at multiple scenarios. What happens if rates stay the same and
No. One of us froze.
and then making a decision whether or not this property makes sense to you, but not losing sight of those fundamentals, of the location, of the neighborhood, of why this is such a great property and why it's going to be a great property a year from now, 5 years from now, 10 years from now. And like I said, not losing sight of the forest for the trees.
Fantastic. Now, when we look at rents, I was recently talking to a realtor out of Kelowna, and I was shocked. Well, shocked, I don't know if that's the right word, but I was surprised, is saying that rents have actually come down a little bit. So what's your experience with what's happening rents here in the Fraser Valley and, like I say, lower mainland? We talk about it a lot. It seems we've hit that kind of ceiling of limitation of what people are prepared to pay, number one. Number two, I think individuals are getting more creative, more roommates, moving back home. I don't know. What are you seeing in the rental market? Do you have a kind of a view of that, Jordon?
Yes, absolutely. So I think that we saw an increase actually in line with the resale marketplace. We saw a bit of a push in the springtime. We went up about 10, 15% in value there. We saw the same thing happen in rental product. It's slowed down over the summer in both those markets, resale and rental. And since then, prices have kind of flattened out. We did see probably a bit of a decrease in rental rates over the summertime. It jumped back up again slightly, but it really hasn't changed much since the spring. So it's same as resale. We're just kind of barcoding back and forth at this point. I think that we have hit a bit of a soft limit on the rents. Affordability is such a challenge for folks. And as all of these external pressures, whether it be cost of energy or food, it makes it more difficult for that portion of their rent to be covered. So we can't just be raising it indefinitely. What I will say is that if you have an A product, you're going to have much more interest in it than, your generic B product, because even though you might be asking premium rents on both of them, you're going to get a lot more interest in the more premium, good location, looks great product. People are drawn to flashy, excited, sexy things. It's the nature of human beings. We're simple creatures. I have 2 vacancies right now we're working through to fill, and one of them is a 2-bedroom basement suite, and it's actually listed for cheaper than I have a 1-bedroom and den condo in a pretty flashy building. I'm actually asking more rent for the 1-bedroom. And in the 2-bedroom basement suite, it's just kind of, it's a generic basement suite. There's nothing all that exciting, but it's housing. And, we've had steady activity on it, steady interest. We found a tenant for our asking price quite quickly. But that sexy 1-bedroom and den condo in the really central location, I had a lineup out the door for it.
Jordon, I want to say thank you for your update. Folks, if you're interested in discovering more or finding out more about what real estate is available in the Fraser Valley, reach out to Jordon Spitters at Eximus. I'll put that, of course, contact in the description. And for those of you who are wanting to understand more about investing in real estate, you can look at the link in the description and see Real Estate Investing in Canada, our video program that will teach you kind of all the things you need to know. We have a great sale on it right now, so take advantage of that. Jordon, thanks very much for your time.
Thanks, Patrick.